Have you ever wondered why every time inflation rises, wealthy Americans somehow seem to get even richer? While middle-class families struggle harder just to survive, groceries go up, rent goes up, insurance goes up, but somehow the rich keep buying more houses, more stocks, and building even bigger fortunes. So what's really happening behind the scenes? Is inflation secretly designed to benefit people who already own assets? And why do millions of hardworking Americans feel financially stuck while the wealth gap keeps growing? In today's video, we're uncovering the uncomfortable truth about inflation, wealth, and how the modern American economy quietly rewards the rich while putting pressure on everyone else. Welcome back to The Dollar Pilot. Today we're talking about one of the most misunderstood parts of the American economy: why the rich often benefit from inflation while ordinary Americans struggle financially. Now first, let's be clear. Inflation affects everyone. When prices rise, everybody notices it. Food becomes more expensive, rent increases, utility bills go up, healthcare costs rise, car insurance rises, everyday life becomes more expensive across America. But here's the key difference. Not everyone experiences inflation the same way. For wealthy Americans, inflation can actually create opportunities to increase wealth even faster. Meanwhile, middle-class and lower-income households often experience inflation as financial pain. And understanding why this happens explains a lot about the growing wealth gap in the United States. The first reason is asset ownership. Rich Americans usually own appreciating assets, things like stocks, real estate, businesses, investment properties, private equity, and valuable financial investments. During inflationary periods, the value of many assets tends to rise over time. For example, when home prices rise because of inflation, homeowners with multiple properties often become wealthier on paper. When companies raise prices and maintain profits, stock prices can eventually rise too, and wealthy Americans own the majority of stocks in the United States. This is one reason inflation often increases wealth inequality, because many middle-class Americans rely mostly on wages, while wealthy Americans rely heavily on asset growth. The second major reason is debt structure. This part surprises many people. Wealthy individuals often use debt differently than average consumers. Most middle-class Americans carry high-interest debt like credit cards, auto loans, or personal loans. Those debts become harder to manage during inflation because living costs rise faster than income. But wealthy investors often use low-interest debt to buy appreciating assets. For example, someone may borrow money to purchase real estate, businesses, or investments that increase in value faster than inflation itself. In simple terms, inflation can reduce the real value of fixed debt over time while the asset continues appreciating. That creates long-term wealth growth. Another huge factor is wage lag. Most Americans depend on paychecks, but wages usually adjust slower than inflation. Prices may rise quickly, while salaries take months or even years to catch up. That means many Americans lose purchasing power during inflationary periods. Even when workers receive raises, those raises often fail to fully match the rising cost of housing, groceries, insurance, childcare, and healthcare. This is why so many Americans feel poorer despite earning more money than they did a few years ago. Now let's talk about the stock market. Many Americans assume inflation hurts all investments equally, but historically, some companies perform very well during inflation. Large corporations with strong pricing power can simply pass rising costs directly onto consumers. For example, if a major corporation increases prices while consumers continue buying the product, company revenue may remain strong. And when profits stay strong, investors and shareholders benefit. This is one reason corporate profits remained surprisingly high during recent inflationary years in America. Critics sometimes call this greedflation. Whether people agree with that term or not, many Americans noticed corporations reporting strong earnings while consumers struggled with rising living costs. Housing is another massive example. Inflation dramatically affects the housing market. As home prices rise, existing homeowners build equity. But renters face higher monthly costs without gaining ownership. This creates a major divide in America. People who already own assets often benefit from rising prices. People trying to enter the market face growing financial barriers. And because wealthy Americans often own multiple properties, inflation can significantly increase their net worth. Meanwhile, younger Americans struggle to afford their first home. The Federal Reserve also plays a major role. When inflation rises too quickly, the Fed often raises interest rates to slow the economy, but higher interest rates create mixed effects. Wealthy Americans with cash savings can benefit from higher interest income and investment opportunities. Meanwhile, average Americans face higher borrowing costs on mortgages, credit cards, auto loans, and business financing. This makes everyday financial life even more difficult for working families. There's also the issue of financial education. Many wealthy individuals understand how inflation works and position their money accordingly. They diversify investments, own appreciating assets, hedge against inflation, and focus on long-term wealth preservation. Meanwhile, many Americans were never taught investing, financial planning, or inflation strategy. Schools rarely teach personal finance deeply. As a result, millions of Americans leave money sitting in low-growth savings while inflation slowly reduces purchasing power year after year. And social media has made wealth inequality feel even more visible. People constantly compare themselves to luxury lifestyles online, private jets, luxury vacations, expensive homes, designer brands. But what many Americans don't see is that wealth in America is often built through ownership, not just income. That's one of the biggest lessons inflation reveals. The people who own assets often benefit more than the people who rely only on labor income. Now, here's an important point. This does not mean every wealthy person is evil, and it doesn't mean every struggling American made bad financial decisions. The modern economic system simply rewards asset ownership very aggressively during inflationary periods. That's the reality. And this is why conversations about financial literacy, investing, and long-term wealth building are becoming more important than ever in America. Because millions of Americans are realizing that working harder alone may no longer be enough to build financial stability. Understanding how money works has become essential. Another hidden issue is cash itself. Inflation quietly reduces the purchasing power of money over time. If inflation stays elevated for years, cash loses value unless it grows through investing or interest-bearing assets. This is one reason wealthy individuals avoid holding excessive idle cash for long periods. Instead, they move money into assets that historically outpace inflation. And again, this creates another gap between financially educated investors and ordinary consumers struggling paycheck to paycheck. Now, can inflation ever help average Americans? In some situations, yes. Workers may eventually see higher wages. Homeowners may benefit from rising property values. Retirement accounts invested in markets may grow over time. But the problem is timing. For many households, rising costs hit immediately, while financial gains take much longer to appear. That delay creates enormous financial stress, especially when rent, groceries, insurance, childcare, and healthcare all rise at the same time. And perhaps the biggest long-term concern is wealth inequality itself. As inflation increases asset values, wealth concentration can accelerate. People who already own homes, businesses, and investments continue building wealth. Meanwhile, people without assets struggle to catch up. This is one reason economic frustration is growing across the United States. Many Americans feel like the system increasingly favors ownership over work. At the Dollar Pilot, we believe understanding the economy is one of the most powerful tools Americans can have today. Because once you understand how inflation actually works, you start seeing why certain people build wealth during economic uncertainty while others fall behind financially. The truth is, inflation is not just about rising prices. It's also about who owns assets, who controls capital, who carries debt, and who understands the financial system. And until more Americans gain access to financial education, investing opportunities, and long-term wealth strategies, the gap between asset owners and struggling workers may continue growing. Stay informed, stay disciplined, and remember, financial freedom starts with understanding how money really works in modern America.